Good morning. It's been a little while since we chatted. Just got back from San Diego. Megan and I had our first wedding anniversary. We brought Boston along with us. Had an amazing time. Was able to check out some real estate down in San Diego, see how the market's doing down there. The market's been interesting, guys. So just to give you an update on what Belwood has been doing. So just this week, we've closed properties from Placerville to the Bay Area. I believe we're going to be getting one in contract down in Southern California here shortly as well. So what does that tell me? That tells me that folks are finally starting to get off of the couch, realize that interest rates aren't going to drop back down to 2%. And they're saying, okay, well, I still need to buy a house. I prefer to buy rather than rent. There's a whole lot of benefits to buying rather than renting. So I'm just going to do it. I'm going to get my 7% interest rate. I'm going to get it fixed, and I'm going to move on, and we're going to get in this real estate game. So you're just not going to be able to buy what you would have with a 2% interest rate. So for all those folks that wanted the ocean view, you're now getting a lake view. For those of you that want a lake view, you're getting a valley view, right? So you're just not able to get as much with your money as you were last year, the year before. So it's unfortunate, but at least you're still able to participate in the real estate market. Okay, this is a level up industry. Okay, you're constantly trying to level up. You don't stay linear the entire time you're in real estate. You buy a small house, sell it, buy a medium-sized house, sell a medium-sized house, buy a larger house, buy multiple homes, right? You're always constantly leveling up. You're never just linear, you're never stagnant, you're always trying to move ahead. And that's what we do with Belwood. That's what we coach you at. That's what we partner with you at, is to always consistently level up your game. So today I wanted to talk to you agents who are listening right now. You might be an investor or an agent. I'm talking to agents this morning. I just had one fella kind of new to the real estate market, thinks he's an investor, great. He brought a property to me, and he's mostly a wholesaler. That's kind of a bad word around here. We just, wholesalers just, man, in and out as fast as they can. Don't give a crap about who they're working with. Just, trying to make a quick buck. So this is for you. If you're listening to that, I'm trying to educate you as to what this market is like, why Belwood as an investment company, as an iBuyer, what we're looking at and what we need to abide by in order to survive a recession. We're in a recession, guys, okay? You're not going to get the same price that you were a year ago for that property. Do we all understand that? I hope we do, because those days of $100,000 over asking price, you haven't seen the home, I just want to get my family protected from COVID, I don't care, I'll buy it cash, right? Those days are not here. Okay, when you have a 2% interest rate and there's a pandemic and there's a lot of uncertainty in there, sure, you might be able to get something like that. But when do these pandemics happen? Like once every 100 years. So let's not count on that to happen anytime soon. So for educational purposes, let me kind of show you visually what we're looking at as far as pricing out these properties, the trends we're seeing, and a cash offer that we're able to offer you guys and your clients. So this is pretty easy to understand. And if you guys have any difficulty with this, please reach out to me. I'd be happy to talk to you folks about this in person. Come to the office. Our office is in Folsom, California. We do business in 13 states across the nation. We're adding on more states consistently, but for right now, we are from Maine all the way to San Diego, all the way to Washington and Florida. Okay, we're covering all four corners of the United States, and we're super excited to keep expanding. Okay, right now is the time to take advantage of the market. Okay, for all of those naysayers out there that, ride the fence, they rode the fence at a 2% interest rate, waiting for it to drop to 1%, right? They missed that ride. Then you got the folks that are saying, well, I'm going to wait till the bottom hits before I buy real estate. Okay, well, what day does that bottom happen, right? There are deals throughout the market, in a inclining market and a declining market. You will always be able to find deals, right? And you buy and sell them within a section of that market, right? Within a 6-month time period, you buy, flip, sell, buy, invest, hold, right? These are the segments that you take advantage of. You don't say, well, I'm going to buy today, I'm going to remodel today, I'm going to sell in 1 year or 2 years or 3 years. We don't know what's going to happen in 1, 2, or 3 years. We can, however, tell you what's going to happen or give you a really close guess on what's going to happen within the next 6 months. And I'm going to talk to you guys about that right now. What's going to happen within the next 6 months? Okay, I'm just going to use easy numbers right now. We're going to say today, somebody brings me a home and they say, hey, Bo, now you can bring it to me, of course, but we have a sales department you can bring this to and get your answers immediately, quickly, so you don't have to wait for a response from me. But I've trained all of our sales associates on this method of pricing. Okay. So I get a property brought to me today in this market, today's market. And let's just say that home is worth $500,000, okay? Now, if we bought that home today, we remodeled that home today, and we sold that home today, we can expect for this home to sell for, let's say, $600,000. Not a huge gap, but let's just say it's a light fixer. Now, we know that this is a decent transaction. We might be able to make some money on this. Usually we want a bigger gap, but again, we'll say it's a light fixer. Well, today we're not going to be able to buy, renovate, and sell this property, right? It's going to take several months. It doesn't just happen overnight. So then we have to look at the trend of the market. Okay, are we trending upwards? Or are we trending downwards? I think we all know the answer to that right now, right? So in January, right, we'll say January, February, March, April, May, June, okay? So within the next 6 months, we're going to want to determine how this home is going to perform. Because if we bought, flipped, and sold that home today, we would get $600,000. Great. But it's not going to happen like that. We have to identify what the trend is. Now, we're buying this home for $500,000. But what would we have bought this home for last year at this point in time? Well, let's just say we were going to buy it for $550,000. So we've had a 10% decrease in value. Now this is just guesstimations, but they're fairly accurate. Okay, again, we're in many markets across the nation. I've been able to see this trend not just in California. I've seen it everywhere. Some areas are more heavily impacted than others, but for the most part, everybody is feeling the pain of price reductions and high interest rates. It's not just for buyers. It's not just for sellers. It's both of us. If you're a buyer, interest rates suck. If you're a seller, I just dropped value, right? I wasn't able to sell during the height of the market. So we find out this trend, okay? And let's just say we had a 10% reduction in value in 6 months. Let's say this was 6 months to get from $550,000 to $500,000. Now this is today. So today, this home we're considering buying is $500,000. 6 months ago, it was $550,000. So what is it going to be according to this trend? What's it going to be in the next 6 months? Well, you see we're on the decline from $550,000 to $500,000. So that tells me that in 6 months, another 6 months, this home is going to be worth $50,000 less. So that number was 600, but now it's 550. Okay, great. How does that affect you as an agent working with Belwood? It's called education, and it's called educating your sellers. Okay, not just trying to make a quick buck, not just trying to throw a deal and, hey, the market's shifting, let's throw 100 deals at Belwood and see what sticks. No, your close ratio is going to be horrible. It's going to be horrible, okay? Because you have to look at the trends, okay? So if we say, okay, well, our resale now in 6 months is going to be $550, and for those reasons, I cannot offer you $500,000 for the home. I can't. I would lose money. I have to keep an eye out for the end product. What will we be able to sell in that 6 month period of time? What will the home be worth? Okay, so now we go back to the drawing board and we say, hey, wholesaler, agent, whomever you are, we can't offer you $500,000 for the house because we see resale value in 6 months at $550. What we can do is offer you $400,000 for the home or $450,000 for the home. Now, every home is different, okay? So don't use these numbers as fact. Well, you know, if it resells at $550, Bo's going to offer you $450. It doesn't work like that. Every home is different, right? Some need a roof, some need a window, some need HVAC, some need all of it, some need foundation work, some just need carpet and paint. Some people just need a cash offer, and the home might be in relatively good condition. Each one of these carries a certain length of time. Now, if he brought a property to me and he said, well, it needs to be completely scraped and rebuilt. Well, okay, that's a long period of time. I have properties that are on the coast right now, Coastal Commission, that have sat for years, 2 years, waiting for the Coastal Commission to approve. Now we're past that. We got approved. It took 2 years. But that's the type of, the length of time that we're talking about to get these things ready to go. Okay, so we have to take into account the market for maybe up to 2 years. And so if we see a 10% decline every 6 months, 20% in 1 year, well, I'm sorry, you're not going to get the offer you want because I'm looking at the downward trend. And I'm not going to say, well, this trend is going to end in 6 months, it's going to end in a year, it's going to end in 2 years. I don't know. What I can tell you is the trend that we're in and the trend that I'm going to follow with when we consider giving you an offer for your property. So for these reasons, we are not going to be able to offer you $500. We'll offer you $450 or $400K based on the trend. Now, you as an agent or a wholesaler, God forbid, can look at this formula, essentially, and educate your seller. Yes, I know your home today is worth $500,000. I agree with you. But in order to make it a Belwood home or a home that looks like this, right? Because we have to have an attractive home. There's a lot of homes on the market right now. They're sitting. What is going are the ones that check all the boxes, a Belwood home, if you will. Okay? In order to create a Belwood home, it costs a lot of money and takes a lot of time. Okay? So for your sellers who say, well, I'm just going to do it myself. Okay? Quit your job, cash out your 401k, you know, and then you can flip your own home. But most people don't have that luxury just to quit their job, cash out their 401k, and work 7 days a week, 5 days a week on their property. They have to continue to working to continue to work their regular job, right? They have to continue to make money at their regular job, and they might be able to spend a weekend or two a month working on flipping their home or renovating their home. Which, in that point in time, they must have contractor knowledge, subcontractor knowledge, permit knowledge, you know, and then a bit of a design aspect. You can't just make it your personal colors. Well, I love purple accent walls and green tile. You can't do that. It has to be something that's going to sell. So in order to make it a Belwood home, you need lots of money, lots of time. So when you educate your sellers, you're going to share with them the cost and time associated with making their home a Belwood home. And it's easy to show what a Belwood home looks like. Go on our website, reach out to any of our sales agents. We have about 15 properties on the market right now, so you can go ahead and see what our product looks like. And if your sellers think that they can make their home look like a Belwood home, then more power to them. Have them do it, and you know, that's great. That's fantastic. I encourage everybody to become a real estate investor on their own or with the help of Belwood. Okay, it's all good. But if they don't have that time, it's time to do it themselves. It's time to educate them. So we show them what a Belwood home is. We show them the cost associated with making that a Belwood home. And then you give them that knowledge. You share that with them with that, and then you're able to clearly give them a passage of exit, right? Here is Belwood. They're not trying to make a whole bunch of money. We're an investment company. Of course, we're going to make money. We're not doing this to break even. My whole goal is to not only make Belwood money, but to make our partners, our investor partners, money. We're an investment company. We're not a break-even company. It's not Belwood break-even. It's Belwood Investments. We're in here to make investments, profitable investments. So here is the way we're looking at this. We show them the decline, we show them what we're now able to offer, and we show them what the product needs to look like. Okay? Pretty simple. Now, when the market trends upwards, which we hope will happen maybe in a year, 2 years, who knows, 18 months, right? When that happens, something different goes on. We're able to identify the upward trend, okay? And we're able to say, well, the market did go up 5% over the last 2 months. So we're looking at 10%. And then maybe 30%, right? Increase in value. Okay, now this is, let's say, 6, 12, 18 months. All right, we're looking at we're seeing a consistent increase in value. Now, one of the most critical moves an investor can make is to project or to assume what the market is going to do. Now, on the decline, this is safety. This is safety, right? We're keeping our investors' money safe right here to avoid any shifts in the market. Now, if the market all of a sudden in March changes, right, and the interest rates drop to 3%, I don't think it's going to happen. I'm not even saying anywhere close that this is going to happen. But let's just say if it did. And the market shifts, and it starts trending upwards. Right? Fantastic. Went right here. We got a bit of a hockey stick move, check mark move. Fantastic. That's great. That means that all of this that we were accounting for turns into profit. Okay? Great for our investors. We were protecting our investors in the first place. And you know what? We probably could have offered more at the purchase of the home, but we didn't see that trend when we offered on the home. We saw a downward trend. So if it does shift during that process of remodeling and start to trend upwards, then that's a bonus to Belwood, and we're happy about that. Now on the reverse side, if we were to say, well, we're trending upwards, and you want $500,000 for this home, and I see a 30% increase, and we're going to be able to sell that home for $650 in July of next year. And for those reasons, because of that upward trend, for those reasons, I can offer you $550, not $500. Right? I can give you more for that home because I see the upward trend, and in mid next year, we're going to make money because I see this trend. That's a huge cardinal rule. No. Don't ever do that. Why? Because it only takes 1 month for it to crash. And not crash like Bitcoin crash or the stock market crash. I'm talking a decline, right? We saw it happen this year. It was, all of a sudden it slowed down, plateaued a little bit, things started creeping up, interest rates got a little bit higher, and then boom, the market got flooded with properties, people slowed down. That can happen really quickly. And so if we assume or guess that we're going to be here in a year and a half, and we only make it halfway, and we start to lose money, well then all of this speculative equity, I call spequity, all this speculative equity is gone, right? All of it. And what does that mean? That means we lost. That means our investors lost. Okay? We've never lost a dollar. Not one. Okay? For those of you who are listening right now, there has not been one investor with Belwood that has ever lost a dollar. Now, the market has shifted. We're having to unload a lot of our properties that we bought, in a competitive market, and we're not going to make very much money on them. We just sold one for $1.5 million, and we made like 30 grand. That's pathetic, but we didn't lose, okay? We dropped price and got out of there. That is one of our exit strategies. Bo, what are you going to do when the market shifts? Well, we're going to drop price and get out of there and move on to a more, effective method of acquisitions, which we're able to say, here's the trend, and for those reasons, I cannot offer you this much, I can offer you this much. Now, this number keeps us safe while we trend downwards, okay? Because in these segments, 6-month segments, people are still buying. People are still buying. So we buy here, remodel here, and sell here. We can pretty much project what our profit's going to be. That'll lead us back to our offer price. Okay, I hope all of this makes sense. If it doesn't make sense, please reach out to me, bo@thebigco.org. That's bo@thebigco.org. I'd love to chat with you about it. The market it's an amazing time right now to invest. Okay, Warren Buffett said it perfectly. When others are afraid, buy. When others are greedy, sell. Okay? For those of you that are on the fence and saying, well, I'm going to wait for the bottom to fall off and I'm going to hit it right, you're going to continue to sit on the bench. You're going to continue to sit on the fence while others capitalize in this market. There's a huge push of investor money right now being pushed into the market, okay? And this is big hedge fund money. And they're buying on the uncertainty, okay? What's another exit strategy for Belwood, just before I wrap this up? That is to pivot to a short-term rental or a long-term rental. Hey, we were going to sell at this. We're not going to get this. We could break even, or we can rent for a short-term period of time or a long period of time. We're going to be able to determine whether or not that pricing works out on the acquisition price. Okay, we can determine. Well, if we bought it at $400,000, if we were not able to sell it at $550,000, what would we be able to make as a short-term rental or long-term rental? Now, all of this goes into play before we buy this home. We look at our exit strategies before we acquire. If our only choice is to buy, flip, and sell the home, and we have no rental opportunity, no short-term or long-term or mid-term, then we won't buy it, because that just eliminated our exit strategy, right? We have to have an opportunity to say, well, nobody's buying right now because interest rates are 20%, in which people still bought when interest rates were really high and 18%, 19%. People still bought. They just weren't able to buy what they had wanted to when interest rates were a fraction of that. Okay, so when we buy this property, we're not only looking at resale, but we're looking at potentially long, short-term, or mid-term rental opportunities. And for all you rookie investors out there, take this to heart right now, okay? It's really easy to succeed in a real estate market when it's like this. It's really easy, okay? I know a lot of new-time investors out there that are just kind of getting their feet wet for the last few years. Buckle up, because you must have new buying strategies right now, or you will lose, and you will lose your investors' money, okay? I'm seeing it right now. We have an agent who didn't learn her lesson last recession. I see her dumping all of her properties right now, unremodeled, not able to rent, not able to sell, complete loss. All of our investors are losing. That's not a method every 15 years is to say, oh, sorry guys, lost again. But it was great while we made it, right? You know who you are, all right? I've called her out before. And you know what? It's a horrible thing. I see about 15 of her houses on the market right now in Sacramento. It's sad. Okay, it's sad because every one of those homes has investors that are a part of it. And now those investors are being spoken to say, hey, we have to sell a skeleton of a home above market value, which is not going to happen, right? We can't rent it out because it's a shell. There's no flooring, there's no insulation, there's no electrical. We can't do a long, mid, or short-term rental, right? So it's just all around loss. They did not look at, or she did not look at her exit strategies when acquiring the property. And we've looked at this. We've just said, hey, you know what? The market is not going to do this forever. It's going to dip. But when it comes back higher. And it's going to dip again. And it's going to come back higher. Real estate is not linear. Or else we would have the same prices that we did, or values that we did in 1950, right? The market goes down and it goes up. It compresses, and expands and contracts, okay? So look at all this mess right here. But if you followed me from the beginning of this recording, this Facebook Live, you'll understand the meaning of this. Trending upwards and trending downwards. We are down here. We're trending downwards. And we must protect our money and our investors, partners' money with this model of investing. So, again, please reach out with any questions, comments, or concerns. I'm here all the time. I have an open door policy. We encourage all of you agents and some of you wholesalers to bring us properties and educate your sellers. Show them this process. Share with them the costs and time and effort associated with remodeling their home themselves or selling to Belwood at a fair market price. This is Belwood Investments. I hope you all have a wonderful fall, and I will check back in with you later. Bye-bye.